Good day, my name is Christelle from Frans, Klerk, Independent Technical Analysts. Stephen wanted us to kick off the show with Sibanye. Now we know that this stock has rallied massively to the top, and for the last couple of weeks, it's found resistance around 29 Rand 88. Now the strong support that the share needs to keep in place is around 27 Rand 91 and also this 24 Rand 52. And if you look back at the history, you'll see 24 Rand 52 was a strong level around the September 2016 as well. Now, the big question is, will Sibanye be able to go and close that window around 34 Rand 16? The question is, yes, it can, if that level around 27.91 remains a support. Now, I also had the question like, Christelle, is this an ideal time to enter Sibanye? No, I don't think it is, because yes, the stock is very overbought at the moment. And this is the stochastic indicator that we've used here to highlight overbought or oversold levels. So yes, both moving averages within the indicator is still pointing upwards. But the fact that it is trading or consolidating above an 80 tells me that the probability of the share to pull back is more likely. So therefore, it's not an ideal place to enter now. Now, you might say, Christelle, don't you want to short the stock? No, I don't want to short it at this stage. There's no turnaround candle. There's no turnaround pattern. I don't see lower highs. So at this stage, if you're in it, I would keep it as long as it's above that 27 Rand 91. And remember, these are weekly graphs. So technically, the stock needs to close above that 27 Rand 91 on a Friday close. Stephen also wanted us to look at African rainbow minerals. And what I found interesting on African rainbow minerals is the fact that this stock has a couple of double tops or lower highs, then pullbacks, almost like a descending channel, and then it rises again. So my first one that I identified was around here in May 2016, and then again here in around October 2016. And see, every time the stock pulls back after these double tops or lower highs played out, pullback. And then again here, this double top started here around February 2019. And let me maybe just highlight that for our viewers, where the stock made a bounce, found resistance and retraced, found support again and bounced, and then found resistance. Ideally, you want that resistance to almost be at the same level as the previous resistance and then a pullback. So some might call this a distorted double top. But when this support line changes into a resistance, that double top or distorted double top is confirmed. And in the African Rainbows Minerals case, we could clearly see a pullback after that. And now the share found support again around 137 Rand 70, and it's making new higher lows on the candles. Now, the big test will be around that red line, and that is the 40-week moving average. Above it, the long-term sentiment towards the stock changes to positive. Now, my stochastic indicator is sitting on a 53. It's on no man's land, so it's not an ideal place to enter the stock. But what one can maybe do is wait for a possible double top, a pullback or a descending channel, and then a turnaround. I think this stock looks beautiful for higher levels, and if you zoom out, you can see that these are double tops that keeps on being honored. So it's a formation that one should look out for on African rainbow minerals. I think this graph looks very healthy to the upside. The big test will be around that 40-week moving average, and that is waiting around 164 and 77. If African rainbow minerals can continue to first change that level into a support and then continue to start above it, the big test will be to see if it changes that 191 Rand level into a support in order to sustain the momentum to the top. Akbar wanted us to look at Mediclinic. Now, there is a double bottom on Mediclinic, and let me just highlight that for our viewers, where a double bottom, triple bottoms, inverse head and shoulder formations, those are all turnaround formations on a technical graph. So my double bottom has started here around October 2018, where the share retraced, found support and bounced. Found resistance, retraced again, found support. And look how beautifully these support levels are almost at the same level as that previous pullback here around February. And then found support. It did find a little bit of resistance there, pulled back a little bit, but look how beautifully Mediclinic found support on the 40-week moving average, and that is seen as very positive. That was seen as a technical goodbye case where the share pulled back, tested the 40-week moving average, found enough buyers to lift it above for higher levels again. And when those resistance levels changed into a support here, that double bottom was confirmed. Now, the target of the double bottom is you can either use the length of the left or the right leg, and you project it upwards from where that formation was confirmed. So the possible target for that double bottom is around 77 Rand 81. Now, we know that because of the rally and the higher levels, my stock is overbought already. But take a look there. My shorter moving average within my stochastic indicator is still pointing upward. There's no sign of a loss of momentum yet. So therefore, I think you can still hold on to the share. This is a possible gravestone doji candle there. It's still a Tuesday graph. This candle is not finished yet. So maybe a little bit of a pullback again, like we've seen here in the week of the 21st of October, maybe a pullback, and then find enough buyers again to lift it to higher levels. This graph is coming from a very, very low base. And interesting enough, if you look at Netcare, Life Healthcare, a lot of these hospital medical shares are looking like turnaround formations on the weekly graphs. My 40-week moving average is a support. Therefore, my long-term sentiment towards the stock is positive. I don't have turnaround candles yet. Akbar, I think this graph looks very healthy. I would only be concerned about Mediclinic when it starts to consolidate on a weekly close below 69 Rand and 8 cents again. But as long as that level around 75.24 remains a support, I will feel optimistic about Mediclinic. Mediclinic was one of my favorite shares. Dis-Chem. Elvin wanted us to look at Dis-Chem. Now, look how interesting it is. This is a candle graph, and when I change this into a line graph, instead of a possible double bottom, and some might say, Christelle, this is only one leg of a possible double bottom, which I can't say possible. It has been confirmed when 23 Rand 99 changed into a support. But this right leg of my double bottom is only one leg, so it might be maybe it went, it's almost on a crutch. It's not very strong. But if I change it into a line graph, I can see a beautiful inverse head and shoulder formation here. That was confirmed when that trend line, that neckline of the inverse head and shoulder formation took the share and confirmed that formation and took it to higher levels. Now, we've mentioned previously that strong support level, they're around 24 Rand, and that 40-week moving average, that red line that is waiting at 24 Rand 46, as well as this diagonal line that we've drawn in there, they all came together at almost the same place. And that tells you the importance of those resistance and now support levels. It tells you that there had to be enough buyers to lift the stock through those levels around 24 Rand in order to sustain the momentum to the top. Alvin, I think Dis-Chem is starting to look like a healthy graph for 2 consecutive weeks, and maybe even this third week, it will change and keep that 40-week moving average into a support. And that will be the first time since November 2018 that 40-week moving average has changed into a support, and hopefully it can keep it a support. I think the graph looks strong. Yes, it is overbought at the moment because of that rally, but I think both those averages within my indicator is still pointing upwards, which tells me that the momentum to the top is still in place. And if you look at the candles, and remember, they weigh the heaviest, they still tells me momentum to the upside, no selling pressure. The buyers are just getting in here and protecting the stock for higher levels. I like this graph. I think it's looking very, very healthy. Woolworths. Now, Woolworths is clearly testing our patience. 57 Rand 15 was tested on the lows of those candles. Let me zoom it out a little bit for 3 consecutive weeks now. So Elvin, 57 Rand 50 has to remain a support on a Friday close on Woolworths in order for us to believe that the stock can maybe reach for even higher levels. And again, Woolworths, if I zoom out, is coming from a very low base. Positive, my 40-week moving average has changed into a support, and that is seen as positive. But 57 Rand 15, and even if I look back, there's 3 tests, 4 on the real body, 5 on the real body, on that shadow, 6, won't count that, 7, 8, 9, 10, 11, 12 testing points on that support line, and that tells me it is a strong line. It's a line that needs to be taken note of and should not be ignored. Now, if we look at our stochastic in Woolworths example, and I want to zoom it out, and I really hope our viewers can see this. Like there was a divergence where my red line started to look like it wants to go through my longer orange line. But then it found support and it bounced from it. And it almost is going sideways along with my orange line. And that tells me that the momentum to the top can clearly even continue, despite that it being so overbought. So the stock wasn't even oversold it. I mean, oversold, we're talking about below a 20. But they immediately protected it to even higher levels. I think this is a strong divergence for even more upside, Alvin. So I think as long as 57.15 on Woolworths remains a support, I will feel comfortable about the stock. The strong resistance that needs to be overcome is waiting there around 61. Let me give you that exact level, 61.51 on the high of that candle on the week of the 4th of November. Hopefully the buyer interest will continue on Woolworths and we can see higher levels. Ishmael wanted us to look at Avenge. Now, Avenge has done nothing for a very long time. And Ishmael, I want to change this to a line graph because this might be a possible Darvas model graph. Now, if you look at Darvas model, his name was Nicholas. He was a dancer. He's a self-made investor. He wrote the book, How I Made $2 Million on the Stock Market. Now, his theory was if a share for a long time built on a consolidation base, along with a spike in volume, suddenly can just lift to higher levels. He compared this movement of a share price to himself as a dancer and said that when he exercises and practices on a specific move, at some stage he just gets it right and that twist and turn becomes perfect. So this might be a possible Darvas model. I'm not talking about the fundamentals, spending on construction, government, etc., etc. I'm just looking at the technical graph. My stochastic is in no man's land, but there is not a spike in volume yet, Ishmael. Have a look at a spike in volume because then this might be a Darvas model. I mean, you can just see it's just consolidating there in the base. My 40-week moving average was tested, remained a support. That is seen as negative. So only when that 3 cents, that 40-week moving average changes into a support, maybe we can see higher levels on Avenge. But your big test will be a spike in volume, and that is not visible yet.